went, below 100,000 twice. We had a double bottom where we hit about 99K. Everyone expecting something, typically the market won't do that, right?
There has been a clear selling pressure from ETFs.
Maybe we go down to the low 70s, but that's really where I think the floor would be. If you're looking at the 50-week EMA and SMA, I think to me, that's really the level we want to stay above.
Guys, welcome back to another show. It's Wednesday. With me, I have Plancy. How you doing today, buddy?
Yeah, no, man, doing very well. I just been, usually I don't track Bitcoin as much on shorter time frames, but yeah, of course, with the recent price action, I've been tracking kind of way more closely than normal. And it's funny, someone posted, things are getting really serious. Plan C is doing intraday charts. And I'm like, yeah, that's a bottom signal in and of itself, right? Because usually primarily focus on long-term and maybe you could say midterm. But yeah, I know it's just fun sometimes to do some different things and mess around with some different indicators and TA type stuff. So no, everything's good. How are you doing?
I'm doing great, still on the move. So tomorrow I'm in Amsterdam. Tomorrow there will be the conference. Excited. There's going to be a couple of busy days. Overall, really good. Thank you. And I'm happy to see that Bitcoin is doing something. Interesting enough, my channel, right, the one that we check weekly, we have gone out on the upside twice. So even if we left temporary, we could go back into the channel. I mean, I don't think the bull run is finished. I've said it multiple times. I'm very open about it. So I'm expecting at some point a move back into the channel. This is about 10 weeks. This is about 6, 7 weeks, which means we could go until the end of the year before we go back into the channel. So I don't know how you feel, but even if we go back in and go a little bit lower, I'm still bullish.
What price do we need to get to by the end of the year to get back into the channel?
Let's say here will be December 29, will be 120-ish.
Oh, yeah. I mean, super doable. I mean, we could get back in the channel within the next week. I mean, it's not like we're really that far out of it. And I mean, depending on what happens, like the US government, I haven't been tracking it closely, but my understanding is supposed to open this week, if not any day now, right? I don't know how much of that is already priced in, right? Because I mean, it's a known thing. Like, okay, it's hard to say how much of it is just the structure of money flows, right? Versus sentiment, right? Because the sentiment's already, that effect should already be in place for the most part. I think there'll still potentially be some amount of a pump when it opens just because it's like, okay, it's actually happening. But yeah, it's really hard to say how the market reacts to that. Everyone knows it's going to open this week now. So it's like, okay, it should be somewhat priced in or completely priced in. But yeah, it'll help flows of money and, liquidity and many things. So I'm assuming that'll be beneficial. That'll benefit us for sure.
Yeah, I agree. Like you said, those, by the way, these are weekly candles, right? So we only have done 1 and 2 now. Today is Wednesday, so it's early days. But even if we stay a little bit on the lower side here, like I said, we're talking about 115, 117. So it's not crazy numbers. What's interesting is fear and greed, though. Still 24. I'm expecting these to move because we've seen a pump to 107, if you remember, and then we collapsed to 103, I think it was. So probably we've gone back into fear. This is actually, I mean, no financial advice, but this is a great time to buy because Bitcoin is hovering at 105 and we're at 24. Isn't that crazy?
Extreme fear, yeah, extreme fear. I mean, I think a lot of the sentiment is just frustration based. I really think it's frustration based. And we did have a bit of a scare. Like recently we went, below 100,000 twice. We had a double bottom where we hit about 99K twice. And then, that pump up got everyone a little excited and then, crashed right down to whatever it was, 102, 103. I think people it was just another scare to the downside. And I think a lot of people are just worried about the bottom falling out and us going down to like 70,000 or 50,000, which we can talk about that in a bit. But yeah, I think those are highly unlikely for different reasons. I can explain what at least my thought process on it. Nothing at this point that's overly concerning still.
Guys, exciting news. December 8th and 9th, I will be attending the Bitcoin conference in Abu Dhabi. If you're coming, please stop me, say hello, let's connect in real life. In the box down below, you'll find a 10% voucher. Use it, get your ticket before it's too late. By the way, if you're enjoying my content, it will mean a lot if you could help me by subscribing to the channel and push the like button to support my journey. Thank you. And then we have, of course, the monthly return. We've seen a bad October. Surprisingly, I'm not going to lie, I was expecting a positive one. And then November now, of course, has only been, 12 days, but we've seen a negative November so far. So it'll be interesting to see how it's going to play out. It's fascinating to see Bitcoin doing what nobody expect it to do. So I don't know what's going to happen November and December, but like I said, I think this market is going to get extended for sure, because I don't think 126 was the top. It's going to be a fun one to see what will happen between now and the end of the year.
Yeah, this calendar stuff has been interesting because it's almost like every month, expectations, it's been quite different than what everyone expected. And I think like, yeah, it's hard to say all the reasons, of course, but I mean, just the amount of people that were all assuming the same thing was going to happen. And that's again where this 4-year cycle thing, I think, is going to break, because everyone expecting something, typically the market won't do that, right? Like, and that's where when everyone was like, okay, we're in Q4, it's just going to pump from here, October, November, everyone's saying like, okay, these are going to be the months. And then, I mean, things did get pretty bullish right when we started Q4. Everyone's kind of like, okay, we're finally here, it's going to happen. But it was just too much of everyone kind of assuming the same outcome. And that's just not how markets work. If everyone's on the same side of a trade, or if everyone has the same assumption, people are going to take advantage of that. So it's better to be a bit more mixed, where people are kind of on both sides. And I think that's kind of where we're at now, is where it's a mixed bag of opinions of are we going into a bear market? Are we still in a bull market? It's a lot more divided. Yeah, that's probably in some ways healthier. But we haven't followed so far the seasonality very well. Sminston's been tracking that, and we're well below the median trend line on his kind of updates. So we could catch up. I mean, we definitely could catch up in the coming weeks. We still have the majority of the month left, so it's definitely possible. So far, November hasn't been that great, and October wasn't that great either, and September wasn't very good either. But we're due for a good month here. Maybe it'll be December.
Interesting to see the ETF inflow and outflows. You can see we had yesterday 524 million in, which was interesting because on November 7 we saw a outflow of 558 million. So these two, they cannot go even, right? And if you go back into the week, look at this bloodbath. There has been a clear selling pressure from ETFs too. So interesting to see how the market is reflecting. We will see tomorrow what happened today. It takes one day for the data to show up, but I guess it's going to be positive because now we've seen a little bit of a pump towards 105, right?
Yeah, just because I've been tracking kind of these levels more than normal. We went down and double bottomed off 99,000, and then we were kind of range bound between 105, or you could say like 104, 105, and the low. We were kind of bouncing around, and we actually, it took us 3 times we had to test resistance at around 105 or 104, and I was like, okay, we got to get through this 105. This is, and once we broke through that, we went up a bit, but then there's still more resistance around like 107 or whatever. And then, we crashed back down and broke through that support, and then, back down kind of almost down to the full lows. But yeah, I mean, getting over 105 is good. We want to hold 105 as support. That's kind of like the first step, getting over 105 cleanly and holding above it. And then from there, it's like 107, and then back to basically the 110, 111 range is the next major resistance we got to get back above. And then once we get above 110, we're kind of back, at least recovered from this recent crash. We're still not fully recovered. Obviously, we got to still work to do, but that's kind of the levels I'm watching. I want to see us hold 105, get above it, hold it, get through 107, and then basically get back to this like 110, 111 range. It's been a mixed bag. We've had inflows and outflows. It's kind of all neutralizing each other. Like you said, last week was a bloodbath. So there was a lot of weeks where it was just inflows, right? We saw like just inflows. Now we're seeing kind of a combination of inflows and outflows. So yeah, there's definitely a lot of signal here. We just got to figure out how to best quantify kind of what's happening here.
I wish there was a better way to track this, because it goes only back to a certain amount of days.
We talk about the bull case a lot. We talk about that's just our opinion. Currently, we believe we're still in a bull market. It's important to talk about, okay, well, if we are markets, say next year, or if we're kind of trending in that direction right now and we're slipping into one, what's kind of the worst case scenario, or what would be expected to be like a bear market bottom, right? And so, okay, so let's just say 126 was the peak, and okay, now we're going into bear market next year. Maybe the bottom is next year, or maybe it's 2027, because it takes about a year to get down to the bear market lows historically. We could get there sooner, obviously, or we could take a bit longer. But if we are headed into a bear market, we're going to bottom out in 2026 sometime, or early 2027 most likely, or at some point in 2027. Say, what do people think? Right? It's over 3,000 votes, so it's decent sample size. I was kind of surprised that more people were actually thinking similar to me. So yeah, you can see there like almost 40% of people are kind of thinking that if we did go in a bear market from here, it'd be a 40% drawdown. And I told people to put the closest percentage. So some people are going to be different than that, but they're closest to the 40%. Yeah, and as you can see, the majority are at that 40%, and then it kind of the next amount is 50, and it's basically the lower you go, the less people think we're going to go that low. And I think it's all very reasonable, actually, in my opinion, because we've talked about this, but we haven't really had that full euphoric blow off peak. And, we've been trading around all-time high levels for months and months and months, and so, yeah, we haven't really got like super overheated on a lot of metrics. So for all these reasons and just the support we built up throughout the cycle, I really do think that we would not have that 80% drawdown we've historically had from here. It just doesn't make any sense. Like it really doesn't at this point, because, for example, last cycle, we broke through the previous all-time high. Like the previous all-time high has been kind of a good proxy for the lows, but we didn't break through the previous all-time high. We did break through the previous all-time high. A lot of people thought, okay, Bitcoin can't go below 20,000 because that was the all-time high in 2017. And we went down to like 115, 116. In my opinion, that was because of the severity of the Black Swan and because of the illegal activity and a lot of things that were just unknowns to the market of like how bad. And again, it was because it was criminal stuff. Like FTX, Celsius, like there was a lot of criminal stuff, just a lot of crazy leverage that was systemic. That's what brought us down past the previous all-time high to that 115, 116 level. I really think if FTX and Celsius and all this illegal stuff didn't happen, I actually think we would have bottomed out in the low 20s. It was just the combo of Luna, Celsius, FTX. Like there was so much going on. I mean, there's so many companies that went under, and it pulled us lower. So previous all-time high was 69K. I mean, there was also, you could say, okay, what about 64, the first peak? Okay, 64, 69. These were the previous all-time highs, right? And so without that extreme Black Swan event, and again, I think this is the healthiest bull run we've ever seen. Even if we haven't gone as high, it's been the most support levels, the most consolidation. We've proven these levels, right? We've traded at these levels for a very long time. So a lot of money has changed hands at these levels, over 100,000. So yeah, I'm of the mind for two reasons. One is this would be just above the previous all-time high, and we put in quite a bit of price action below the previous all-time high. It took us a little while to get over that 69K all-time high level. We kind of traded around that level and below it for quite a while. So I think once we broke through, we really put in a lot of price action around there. So I think there's strong support at that level. Plus, when we had our dip this year, because we did go down to, I think, around like 73, I think it was, or 74, I can't remember exactly. But we did put in a really good bounce. Like, we already had a drop down to like the low 70s. That was early in the year. I can't remember exactly what it was. I should have that memorized by now. But anyways, we went down to the low 70s. And then we bounced all the way back up to the the all-time high and stuff. So we've already tested that level once, and we had a really strong bounce from there. Plus, the all-time highs. So that's my target. I think if we go into a bear market, I see the bottom being next year, even early. Maybe we get down there pretty quickly, right? Could be a mini bear market. Like we could just get down there and like halfway through next year we're already bottomed out and coming back. Like that's also possible. It's another scenario, right? Like a mini bear market, and then we continue with the bull. I'm not ruling that out. Maybe we go down to the low 70s, but that's really where I think the floor would be. That I'm pretty confident on that. Of course, say we get some crazy cascading liquidations, whatever, Black Swan macro goes really bad. Okay, we might go down to like mid 50s or something, right? That's kind of like the first quantile in the quantile model, but I still really think it's low 70s. And yeah, it's interesting what the poll thinks, but yeah, what do you think?
It depends on how high we go. Like if we do move towards the 200 or 180, well then, yeah, we could indeed, correct 70% or 60%. But if 126 was the top, there is no way that we're going to go down to 37 because we haven't seen the banana zone on the top, which means we won't see the banana zone on the bottom either, right? So they go in parallel. I think a 50%, 60% correction is possible, but not from 126. We'll have to go higher. So I'm expecting a big drawdown potentially. By the way, to point a reference here, correction we've seen from the top to now is about 22%. So can we see a 30% or 40%? Like you said, absolutely. We can go maybe towards the end of the year, see a bear kind of correction. And then in 2026, we should pick up again, and maybe we go to 150, 180 to then correct maybe 40, 50%.
Completely agree with what you said. I mean, I think if a 126 was the peak, my base case is I put 44% or whatever, basically down to 70,000, kind of between 40 and 45, 40. You could say between 40 and 45% would be my base case. Worst case, if there's black swans involved, it would be that 50% correction. But yeah, 60 and 70%, I don't see happening if this was the high. And then completely agree with what you said. If we do get over 200K next year, that's where that 60, 70%, pullback is more likely to occur if we get a full-on euphoric peak. And then it's like, okay, yeah, then we need to kind of correct 60%, maybe 70 at the worst. But from here, it's like 40 to 45, 50 worst case. So this was, I put this out on November 4th, kind of 3 things I expected to happen. So far, 2 have played out. Hopefully the third plays out as well. But I basically, on November 4th, we were kind of crashing down, and I thought, okay, I think we're going to go below the 50-week EMA and 50-week SMA temporarily, which we did for a couple of days, right? We went down to 99,000, double bottomed. And then I said, okay, but I think we're going to close the week above the 50-week EMA and SMA. I was pretty confident on that, and we ended up closing above it, which was great to see. I really wanted to see that. I think that was important. A lot of people watch these levels. I mean, people think like, why did these lines matter? Why do these, why can't we look at the 60-week SMA? Someone posted on my comments. I'm like, well, no one cares about the 60-week. It's not a level that everyone's watching. So it's kind of like the self-fulfilling prophecy with TA that so many traders are watching these levels, they become important for that reason. So they do matter, and it is, they do affect the price action to a degree. So anyways, we closed above those 2 levels, which was great to see, those weekly EMA and SMA. And then the third kind of prediction you could say I have is it would take about a week 2 to recover. So 2 weeks would be about November 18th. Obviously, it's just my opinion and just a prediction. So there's anything can happen. But I did think it would take a couple of weeks to kind of recover from this. So for me, a recovery is getting back above like 110, 111. That would be kind of like a recovery. So I'm hoping, between now and November 18th, if we can get above like 110, 111, then basically all 3 of my predictions made out. So there's a lot of on-chain metrics that are kind of not known or not talked about, or lesser known metrics. Everyone talks, or a lot of people talk about the MVRV, market value to realized value ratio, and there's like a Z-score version of that got really popular last cycle. This is actually an improved version that Checkmate created. Yeah, active value to investor value ratio, and there's a Z-scored version of it. And I think it's a pretty cool metric, actually. They've refined and better quantified the like cost basis of the network by removing some of these lost coins and really old coins that are most likely never going to move. And so, yeah, it's just if for the Z-score, right, you can have it, 0 is kind of the midline, and then you have above it and below it. So 0 is kind of that midpoint. And interestingly enough, if you look at the midpoint line at 0, and this is on-chain, this is different than TA. So it's showing confluence between on-chain and TA, right? These are, people would say, well, these are all showing the same patterns. Well, they don't have to, right? These are completely different things, on-chain versus TA. This is on-chain, and it's one of the better on-chain metrics, in my opinion. And you can see, we basically, that 0 level is really important. And we were at that level before the big pump we had in 2021, right? After COVID, we basically found support at the 0 level, and then we went on our big run. Came back down with a double cycle, right? We kind of dipped just below it with the double peak. I should say not double cycle, double peak we had in 2021. We basically went a little bit below it, and then we recovered. And then when we did ultimately break below it, that's when the bear market occurred. We broke below it 0, and then we bounced, we got rejected when we tried to get above it again, and that's when we had our bear market. But this cycle, right, this bull run we've had the last 3 years here, you could say, or however you want to define it, off the lows of 16,000, we basically have found support at the 0 level every single time, right? This has been consistent support for us. This is where we bounce. So right now we're just above it. We're in a healthy position. And if we go just below it, it's not the end of the world. Someone asked me, well, what's your invalidation of this on-chain metric? And I said, well, I don't want to see us really go below negative 0.25. I'd like to see us stay above negative 0.25, kind of like a little buffer below the 0 level. But we did recover in 2021 for that second peak, and we went down to negative 0.35. So we're in a great position here. It's just showing essentially nothing's changed. The pattern is intact, and we're basically just bouncing off this 0 level. And assuming we don't crash down into the low 90s for a while, this would just be this would be like the fourth time, you could say. This is just repeating. So I think these are all patterns that are worth noting. And people don't really watch this metric. It's different than TA. There's not a lot of traders watching this, right? There's only kind of like the on-chain nerds looking at this stuff. So there's a lot less people looking at this. So it's showing more like, what this is showing is there's healthy amounts of profits, but it's not, basically we're kind of like the difference between the cost basis of the network and the price. We've kind of come back to almost being at a level where there's just not a lot of profits in the market, and it's a healthy level where we've seen bounces from here. People aren't in severe pain either, so it's a good kind of like midpoint where we get overheated and then we come back, cool off, but we don't, go into that place where it becomes like a capitulation because everyone's in extreme pain. It's just a kind of an equilibrium where it's like, okay, some people are in pain, some people are in profits, but if you look at everyone, it's kind of like a good point for a reset, and then we can move higher.
I love it. It reminds me of this part here, It reminds me of a more extended version of what happened here, meaning we're missing the banana zone, this action here going up. Let's say maybe we will see 2 cycles in one, right? So instead of 4 years, it's going to be 8 years.
More of a mixed cycle where you have like some mini bear markets, and it's hard to know, like, okay, is this one cycle? Is this,
exactly
2 different cycles? What is this? Like, because we're just going to kind of have these cool off periods, and we're just going to be trending up like over time with a lot of consolidation. Like, I think that's the pattern we've seen now, and I don't see why it would really change dramatically. But to your point about the condensed versus the extended, like 2021 for a lot of reasons was condensed because we had that severe drop during COVID, and then we had basically the money printing. We had that like crazy, like giving people stimmy checks and all this stuff, which we could see again this cycle for sure. But giving out money, it sounds like they're talking about that with the tariffs. But everything was really felt pretty condensed in 2021. Just the way it happened, just the severity of the drop during 2020, and then the money printing was really insane. As far as I'm aware, that was like the fastest peak we had in any cycle. When we peaked in 2021 in April, right? We peaked early in the year. We still had our second peak in November at the end of the year, but we did have that a major peak early on in that cycle. So yeah, that cycle did feel condensed in some ways. And then yeah, this one, like you said, it's kind of extending. You can see the way the circles are there with the green circles. And this one's super simple. I mean, this is just a TA indicator. A lot of people are probably already aware of this one or have seen it on X. But I thought this was like, it's very simple, but it's interesting because it's a simple pattern that's played out again. And this is just confluence with the last chart we showed. So basically, this is just the 50-week simple moving average, right? The daily crossing below the 200-day simple moving average. And people think like, how can these patterns just play out like so like clockwork over and over again? Every single time this has happened throughout the last couple of years, there's been different sentiment at the same levels, but it's the same pattern. There's nothing's changed. It's just every time we go through this, it's almost like it's worse for people because it's happening again. But yeah, basically just the cross below it. This is like called the death cross, right? And when it's flipped where the 50-day SMA goes above the 200-day SMA, that's a golden cross, right? So basically we're coming up and we're just about to have our 4th death cross in a row. And every single time so far, the last 3 times, it's marked pretty much the bottom, right? We're at or coming very soon to the bottom. We might trade for a few more weeks or even a month, kind of at these levels, or maybe we dip one down once more. But it's signaling the bottom is near or it's already in. That's basically what this indicator is showing.
There's people trading these averages, 50 and 200 are pretty common. So it's good to see that we've seen another cross because they happen quite regularly. So again, this is not concerning people like you and me. They plan long term. Of course, if you are a trader, yes, you want to check these things. But if you are in for the long run, just another event.
Exactly. Yeah. To me, it sounds like scary, the death cross, right? Like for people that haven't come across, like, oh, this is death cross, we're screwed, like it's over, right? That's what it sounds like. But I mean, the reality is the way this cycle's played out is this has been a positive signal. So in sometimes this would be like, okay, if it wasn't in this context, you could say, oh, death cross, that's probably negative. We could go into a bear market, whatever. But in the context of this cycle, this has been the pattern, and this has been a positive thing because we've seen bounces from this point. And I'm not showing this to say like, okay, guys, we should be trading or whatever, following this as a trading indicator. No, we don't promote trading. It's simply to show that this pattern, what's happening right now is nothing that's out of the ordinary for this cycle, right? It's in the context of this cycle. In other cycles might be different, but in this cycle, this has been a consistent pattern, right? I think it's worth noting, especially if we have another bounce from here, that'll be a fourth time in a row. To me, that's significant for TA. That's something worth noting. It's just saying like, okay, we're kind of cooled off and ready for the next move up. That's really what I'm getting out of it. And that's for people that are long-term holders, conviction. It's about guys like, look, don't over panic here. Nothing's abnormal. And this is showing an extension of the next leg up. So don't get shaken out. That's really more, it's not about trading. It's more about don't get shaken out. Nothing's abnormal. That's really the takeaway for me. We've kind of highlighted this. I mean, I do think this is the most important bull market support. If you had to force me to say like, okay, using TA, what's your bull market support band? So the one that's really famous and called bull market support, and actually has been pretty good bull market support in previous cycles, like 2017 and even last cycle, it kind of was the support, is the 20-day SMA and the 21-day EMA. And that's popularized by Ben Cowan, right? So he's the one that always talks about bull market support and he kind of tracks it. But I really think this cycle, this is the true bull market support band. So basically looking at the 50-week EMA and SMA, I think to me, that's really the level we want to stay above. And that's similar to the last TA chart we showed with the 50-day crossing below the 200-day. This is highlighting the same points in time where we bounced off this kind of bull market support band. So this is something I'm tracking because I want to kind of consistently see us finding support. If we do come down to this band, like find support here and then, bounce. And it's ticked up slightly. So this is a couple days old, but pretty much the same. We're kind of like, it's probably 101.5 to like 103.5 or something, right? So this is the level we closed above this last Sunday that was important. And we'd like to see another close, this coming Sunday, I'd like to see another close above this, these kind of two moving averages, right? So it's a weekly close. And so every week we kind of want to see us above, and we've put in wicks below this. It's not the end of the world. Even if we were to go below 1 week, it's not the end of the world. Usually with my understanding with like these sorts of indicators and stuff, if you're having multiple weeks, like say 3 weeks in a row below, that's when you're like, okay, this is basically broken. Or if you have a really, really big close below it, like if we go well below it to like 90,000 or 80,000, obviously then it's broken, right? But even if we have 1 week close below it, then the next week above it, we're kind of okay. It's basically a support level that's important.
Yeah, I follow these too. I mean, I had Benjamin Cowan a couple of times on my channel. By the way, he's in Amsterdam too, so I'm going to see him in the next few days. And I follow these too. And I'm happy to see that we indeed bounced back. Was a bit of a relief, to be honest. Right there.
Yeah, exactly. Even if we have our long-term conviction, you and me, we're definitely here for the long term. And you've been here for way longer than me, but we're both long-term investors and have a lot of conviction. Similar philosophies around Bitcoin, but even with us, it's like, okay, we're cheering for Bitcoin, right? Come on, guys, like let's find support at these levels. Like, what's going on? How are people selling? Like, if you believe Bitcoin's going to $1 million based on the math and the quantile model and the power law and all these different things, it's like, why are you selling here? People sell at 100,000. They think, okay, I'm going to buy back in when we get down to like 40,000 or 50,000. We only go to 70 or 80. They never get back in the market, or we don't go down at all, right? And basically, they're left on the sidelines, right? And then the price goes to 120, whatever, 130, and it's like, oh, I'm going to wait for it to come back. Well, that can keep happening. It's really hard to buy above a place you sold psychologically, right? So if you sell at 100,000, you get shaken out of the market, then it's at 120, and now psychologically, it's painful for you to buy back in at a higher level than you sold. So then you're like, oh, I'm going to wait, and then it goes to 150. Right. Then you're like, okay, now I'm really going to wait, and now I really can't buy. So people can get sidelined, and you're going to miss the move to whatever, 500,000, $1 million over the next, 7-10 years, whatever, and beyond. So, and just having Bitcoin as an asset beyond the price, there's a lot of value in just having Bitcoin and understanding the philosophy behind it. So there's a lot more intrinsic value than just number go up. It's a freedom. It's you're supporting a network that's decentralized. So there's a lot more here, right? Just the freedom to spend your money, and that's a whole nother show. But yeah, I just don't want to see people get like shaken out, at these levels. And anyways, it is what it is. The main thing I wanted to show here, because we already talked about the 50-week EMA, is just the RSI. Again, weekly RSI, same levels we bounced at previous times. The on-chain metric we showed, same balance point as previous times. The cross of the 50 and the 200-day death cross, same levels we bounced at previous times. There's a lot of confluence around where we're at and showing that we should bounce if the patterns continues. So this is the fourth time we've got down to like the 44 range. We've talked about short-term holder cost basis, an on-chain metric. It's basically a weighted simple moving average. It's a volume weighted simple moving average, these on-chain kind of cost basis. Short-term holders been determined important with kind of the statistics behind on-chain data. It's a point where you kind of below 155 days, people are more traders and more likely to get shaken out. And then above 155, people become stronger kind of hands if you combine everyone together. But this is a level I'd like to see us get above, because this is, above the short-term holder cost basis it's like the 200-day simple moving average with TA. It's a good indication we're still like solid in a bull market, right? So above the 200-day SMA, above the short-term holder cost basis, when you're above those levels, you're basically like, okay, we're in a bull. Like it's kind of more confirmation we're still in a bull market. So this is a level I want to see us get above in the next like week or two. And that's pretty much it. Like, we dipped below it multiple times. So it's not a big deal we're below it. That's been normal this cycle. But to get above it would be further confirmation. Okay, guys, like, yeah, we're definitely still in a bull market. Because in a bear market, usually you can't get above the short-term holder cost basis. You get rejected on it from it multiple times. So, if we do reject hard for the short-term holder cost basis, that could be an indication, shoot, okay, we are, if we're kind of consistently maybe like getting rejected 2 or 3 times, say we pump up and then we just get big rejection, come back down, try again in a couple more weeks, get rejected. That's when I would start to be like, that's not good. Like, it's not good to getting rejected from the short-term holder cost basis. But there's no signs of that. We haven't had that happen yet this cycle. We've kind of broke through it when we've attempted most of the time. And then, this is just it's a long-term model. Obviously, the Quantal model, we've talked about it. I've been refining the visuals, but it's the same kind of targets, right? Just so people maybe want to see an update. Some things have mildly changed, right? Things are constantly updating when it comes to, as we tick ahead, these targets that go out, a couple months into the future, they kind of slightly change, right? Naturally. So just to kind of bring it into the conversation we've had today, if the peak was going down to the 15th quantile, which is the top of the bottom gray band, that would be around 70,000. But by the time we get there, it's going to be at least 3 months, if not 6 months. Yeah, I don't know. Again, these numbers, that only brings us down to kind of like the high 70s and low 80s, right? Even to get down to the 15th quantile. And then for the first quantile, first quantile, usually it takes a pretty big black swan or a pretty massive capitulation to get there. But okay, say we get down to the first quantile in like 6 months or 9 months. It's low 60s, right? It's kind of mid low 60s. Like, and even today, like, okay, people are saying like we're going to go down to 50,000. This model doesn't show that. It shows that like 52 is kind of worst case. Like, we could go slightly below the first quantile, but I guess you could say if we just completely crashed into oblivion today, okay, 50 is like the very bottom of this model. But yeah, by the time we get there, it's going to be higher, and the chance of us going down to the first quantile is pretty low, considering we didn't even get to the top 2 bands this cycle. We haven't even got above 85. So 85 is red. That's the second to top band. And then above the 95th quantile is that top gray. So we've pretty much just been range bound in the yellow and the blue, right? So the yellow and the blue is the majority of the data set. So yellow and blue are basically between like 50 is the midpoint, right? So you could call that fair value or whatever, but that's the middle of the model. So we spend half the time above, half the time below. That midpoint to the 15th quantile, and then that midpoint to the 85th quantile, that's basically 70% of the overall time spent, right? And this cycle, that's what we've been doing. We've just been chilling and kind of going up within that yellow and blue band. So we haven't gone to red. We haven't gone to gray on either side. We've just been in the middle, which is healthy and fine. There's nothing wrong with it, right? So everything's still intact. This is a long-term, kind of statistical-based model framework, you could say. And we're a little above this now. We're probably around the 47th quantile. So according to this model, it's a slight discount basically over the kind of the midpoint. And super healthy, cooled off place to be. And it kind of shows best and worst case scenarios from here.
Crazy it was for me to see that 16% of the people they voted, they said we're going to go to 37. That's not even in the model, right? To show how low that number is.
And that's where it's valuable to have these sorts of models, because, it is using hourly data since the beginning. It's like a lot of data points, and it's just looking at the mathematical patterns, and it does give like a framework for what's reasonable, right? It's not to say it's the be all end all, but it gives a realistic guide for kind of worst case and best case range, right? And then we can be anywhere within that distribution. You have to decide. You have to factor in macro, the business cycle. There's many things. Smithson's been doing some phenomenal work on the business cycle as well as the copper gold ratio. I think it's super valuable what he's doing because it helps to kind of us to understand, like, okay, so if these are the major drivers of the 4-year cycle, or I said 4-year cycle, if these are the major drivers of the Bitcoin cycle, then these are the things we should be paying attention to, these outside influences, the macro. Basically with the business cycle, this is the longest contraction of the big business cycle in basically since the index was created, going back like 60, 70 years, I think it was. But we can get it. That's kind of a cliffhanger for next week. He'll talk about it. But for people, that are not many people are talking about. So people are starting to become aware of the business cycle and its potential role in actually driving the Bitcoin cycle.
Excited to have Smithy back next week so we can go into those models and charts you just mentioned. So guys, remember to go and follow Plan C. If you are not, in the description, you will find all the links down below. And we'll see you next Wednesday. Cheers.